Hello everyone, this is Jim Lucy, Editor-in-Chief for Electrical Wholesaling and Electrical Marketing, with episode number 130 of the Today's Electrical Economy podcast series sponsored by Champion Fiberglass. Champion began producing epoxy fiberglass and conduit fittings in 1988, and in 1990 developed the first conduit from epoxy resins that had flame resistance and low smoke characteristics. This met the most stringent codes and specifications. In today's podcast, we'll discuss the latest results from the quarterly survey on electrical market business conditions published by Electrical Wholesaling and the Vertical Research Partners equity research firm. We'll also be looking at some stellar stock performance from a bunch of publicly held electrical manufacturers, distributors, and contractors. We'll be looking at some weekly economic indicators that can give you a sense of where the U.S. economy and the electrical market will be headed in the coming weeks and months. These indicators are rail freight car traffic, the Baker Hughes rig count, oil prices, and copper prices. We normally discuss weekly unemployment claims, but because of the government shutdown, this information has not been published since the week of September the 20th, and we covered that data in the last presentation. Our thanks again to Champion Fiberglass for sponsoring today's Electrical Economy podcast series for 2025 and for the past 5 years. One of the more interesting leading economic indicators for the overall U.S. economy is freight car traffic. It's a measure of the amount of raw materials and finished goods being shipped by rail, and the best source for this data is the American Association of Railroads, or AAR. It publishes this data weekly at www.aar.org. This data once again is on the upside, and for the week ending October the 11th, total U.S. weekly rail traffic was 498,462 carloads and intermodal units, and that's down 1.3% compared with the same week last year. Total combined U.S. traffic for the first 41 weeks of 2025 was 20,227,976 carloads and intermodal units. That's an increase of 2.8% compared to last year. Intermodal units are those big box containers that you see on trucks, on ships, and on trains. The data slipped under 500,000 carloads and intermodal units for the first time since the week of Labor Day, and only the third time since July. I consider any data over 500,000 freight cars to be solid. Most of the individual freight categories are positive, with grain up the most at 5.7%, followed by coal at 4%, and total intermodal units at 3.4%. We also had total traffic up at 2.8% and total carloads up at 2.1%. Metallic ores and minerals were down the most at negative 1.5%, followed by petroleum and petroleum products down 1.1%. If you track the oil market, you're probably familiar with the Baker Hughes rig count. This tracks the oil and gas rigs that are operating. The data is available by state, by basin, and nationally at www.rigcount.bakerhughes.com. This slide gives you an idea of the largest oil and gas deposits. It gives you a good sense of just how many of the large oil players are in Texas and Oklahoma, and how big an area the Marcellus gas region covers in Pennsylvania, Ohio, and parts of West Virginia. There was very little change in the Baker Hughes rig count in the most recent data. For the week, the U.S. total rig count was up one rig to 548 total rigs. That's still 37 rigs down from this time last year for a 6.3% drop. Gas rigs in the total for the U.S. are actually up for the year with a 22.2% increase to 121, while oil rigs are down 13.3% to 418 rigs. New Mexico and Oklahoma both gained 2 rigs, and New Mexico is up 3 rigs year over year, while Oklahoma is even at 42 rigs for the year. The nation's largest basin, the Permian Basin in Texas and New Mexico, is down a rig in the most recent data, and down negative 53 for the year with a 17.4% year over year. The number 2 basin in the U.S., Texas's Eagle Ford Basin, was even for the week, but is still down 5 rigs over this time last year. At the end of last week, prices for West Texas Intermediate Crude Oil, or WTI, slipped under $60 a barrel for the first time since April 2021, and many economists are looking at this to see if it's the start of a longer-term trend. Prices were at $57 a barrel for WTI on Friday, October the 17th. Economists like to call copper pricing Dr. Copper because it's the leading economic indicator for future business conditions. Copper is used in so many industries, with the construction industry among the leading markets because of its use in wiring cable and copper plumbing pipe. Copper prices headed over $5 a barrel again in the early days of October, and they remain hovering around that mark. So far this year, they have closed over the $5 per pound mark on the COMEX exchange for 21 days. They were a hair under $5 a pound on Friday, October the 17th. The quarterly Electrical Business Conditions Survey published by Electrical Wholesaling and Vertical Research Partners, a Connecticut-based equity research firm, was published last week, and it pointed to some steady if unspectacular growth in the fourth quarter of 2025, or 3.9% as a forecast, and that's after growth of the third quarter of about 7%. This week's issue of Electrical Marketing will have more on the report, but we'll hit some of the highlights in this podcast. We've been doing this survey for 5 years now, and over the past 5 years on a quarterly basis, the average quarterly increase has been 3.6%. As we mentioned in the third quarter, the sales were up 7%, so that's a bit over the average. And going into the next quarter, they're going to be right around, just about that, just under 4%, so pretty close as an overall average. You can see where the sales were way down during the COVID era, and then the really large pickup there just after that. I always like to see some of the distributor verbatim comments on business conditions. I'll be sharing some of them with you here. Haven't heard the word tariff for about a month now. Projects starting to pick up. Stock and flow are steady. Pretty good backlog of projects. I think the year finishes strong. Industrial manufacturing in the Midwest is spotty. It depends on the industry. Pent-up demand post-tariffs is playing out more some. There's more to come. Interest rate reductions may have moved capital expenditures equipment up a notch. We're starting to see price inflation again after a 3-year stretch of deflation. And here's a few more. Inventory levels are still significantly higher than we'd like them to be. No end in sight for the data center runway. Not exuberant given potential for volatility, but 2026 is shaping up to be better than 2025. Reshoring is currently manifesting mainly in reopening plants that have been mothballed within the past decades. Tariff impacts on pricing have been accepted in the market. Overall market is slow. Capital spending is down. The stock of publicly held electrical manufacturers, distributors, and contractors for the most part had a solid quarter, and quite a few of them are way over the market indices for the quarter and year to date. Let's take a look at some of the market leaders. All right, I've got 3 different stock charts in here. I've got the first column on the left, quarter to quarter leaders. Second column, year to date change. And the third column is actually taking a look at stocks from January 1st of 2020. I always like to kind of get a sense of where things were before COVID. For the first, looking at the leaders, the market leaders, that were all over the market indices. The yellow, sort of the NASDAQ, S&P, and Dow Jones. You can see the NASDAQ for the quarter up 14.3%, S&P up 9.5%, and Dow Jones up 7.7%. The stocks that were up over all 3 indices, LSI Industries up 41.2%, IES Holdings, the electrical contractor, up 38.1%, Nvent Electric up 37.8%. MCOR Group up 31.1%, Acuity Brands up 29.8%, we've got Legrand up 28%, and a fraction, Nexans up 28%, ABB up 26.8%, Dialed up 26.3%, Mearson up 24.2%, Generac up 23.5%, GE Vernova up 19.7%, Littelfuse up 15.9%, Fastenal up 15.4%, and Wesco up 14.7%. Going over to look who the leaders are year to date, we've got IES Holdings, that's the contractor we just mentioned, up 99% for the year. GE Vernova, that was the electrical business that was split off of the GE parent company, up 85.4%. It was split off last April. Legrand up 48.4%. Again, for year to date, Nvent up 45.9%, MCOR up 44.8%, ABB up 34.7%, Quanta Services up 33.7%. Acuity Brands up 25.9%. It's interesting to me that 3 very large electrical contractors were up among the most for both quarter to quarter and year to year. It makes you think that quite a bit of that with the market for electrification, certainly the growth of data centers and grid standardization, grid revitalization. Acuity Brands up there again, over 25, basically 26%. Nexans up just about 24%. Mearson also had a nice year-to-date so far, 23.3%, Rockwell up 22.8%, Siemens up 21.2%, and 3M up 20.7%. Moving over to the column on the right, again, this is looking over here is how stocks have been since the pre-COVID era, like we could call it. And you can see some pretty massive total cumulative changes, as well as an average change over the past 5 years. Again, that IES Holdings up. This is the annual change since then, 298%. Quanta has been up 185% over the past 5 years. MCOR up 131.9%. Interesting to see that those are the 3 stocks of electrical contracts up at the top of the list. The annual change still impressive, but down a bit compared to those astronomical figures as we look at the rest. Eaton's up a very solid 58% average for the year over the past 5 years. LSI Industries up 57.6. We've got nVent, we've mentioned them before, up about 56.8. Wesco up solid 52.3 average. ABB also in the top leaders, 48.8. Nexans 38.7 average. Hubble up 38.2, Acuity up 32.7, and Schneider up 32.6. And that's looking at even the market averages, as you can see. NASDAQ 30.1% average when I divide out the total increase over the 5 years. S&P up 21.2%, down. The Dow down is up 12.2. That concludes our presentation for today. A special thanks to the folks from Champion Fiberglass for sponsoring today's Electrical Economy Podcast series for 2025, as well as over the past 5 years. Please contact me if there's any other type of economic data you would like us to cover in these podcasts, or if you have questions on some of the data presented here. You can contact me directly at 913-461-7679 or at jlucy@endeavorb2b.com. Our next presentation will be on Monday, November the 3rd. So until then, stay healthy, be happy, and I look forward to talking to you then.